Stocks make fresh all-time highs. However, the high-yield bonds are diverging from stocks over the past few days, and I'll explain what that means. I think the pullback for stocks might be very close for us. We will try to examine the situation in the bond markets and see if Jerome Powell's days, the Federal Reserve Chairman, are numbered there. Dollar bonds could sink gold, and finally we'll look at Bitcoin, which made new fresh records, and it could go to the moon. All this and more in today's edition of MasterChartsTrading.com Market Recap for July 11th, 2025. Please don't forget to like, share, make a comment, or ask any questions you like. If you're a subscriber, stay tuned. We'll be covering various securities in the members only section, namely market breads, some of the energy, oil, consumer discretionary, some of the large cap stocks such as Johnson & Johnson and Nike, as well as quite a bit of various speculative securities such as Estee, Lauder, Taysha Gene Therapeutics, Estee, Match Group, Cronos Group, and MindMed. Cronos Group and MindMed are, Cronos is a cannabis and MindMed is a psychedelic company, as well as some of the gold related. So stay tuned. Throughout the presentation, I'll be using my proprietary MasterChartsTrading.com price action indicators, which you can see on this chart, this green, blue, red, and yellow lines. We are currently looking at S&P 500 on the daily time frame, meaning that each candlestick is a day's worth of activity, 1 day's worth of activity. So last week I mentioned that we had a what's called an exhaustion gap, what I think was an exhaustion gap, from 2nd of July to 3rd of July. You can see it kind of right there. It was filled immediately next day. And yesterday, on the 10th of July, we actually made a fresh all-time high. So the fresh high was at 6,290. Previous high was at 6,284. This is obviously good news for the bulls. We are still seeing what's called a short squeeze. So short squeeze occurs when previous records, this is a previous records from February, they're exceeded, and traders that place their short stops at the previous highs are squeezed out and are forced to cover their short positions, and this is exactly what we're seeing. So all-time highs, obviously great for bulls. The only thing that I am kind of seeing right now is this minor divergence. So we're currently looking at JNK, or also known as High Yield Bonds ETF, and you can see that from the 3rd of July, when it made an all-time high, until today, we've been seeing a lower prices, whereas for S&P 500, we've actually been seeing higher prices. It's a minor divergence, but why do I even care? So let's look at JNK on the weekly time frame, longer-term chart. We're currently looking at high-yield bonds on a longer-term chart, and notice down below here we have what's called coefficient, correlation coefficient. So this, notice that it spends most of its time in the positive territory with an occasional foray into negative territory. What this shows me is that high-yield bonds are normally doing the same thing as the S&P 500. And very rarely they're doing something different. In fact, current correlation is 83%. So on 83% of weeks, this is each week, S&P 500 and high-yield bonds are doing the same thing. Now, you have to realize that that was a weekly chart and this is daily. So we literally had like 5 days of minor divergence. So we have, for the past 5 days, diverged. The high-yield bonds are moved lower, while S&P 500 moved higher. How big of a deal is it? I don't know. I mean, usually the divergences, sometimes divergences continue for days and weeks. Sometimes they resolve immediately. I'm just pointing this out because divergences are important, and we sometimes want to, pay attention to them. So this is what I'm showing to my subscribers and here on YouTube, is that we may want to pay attention to this divergence. This may or may not play out because this move for S&P 500 was just very, very strong. Having said that, we do have quite a bit of gaps still unfilled, namely this obvious gap right here where I'm hovering between 23rd and 24th of June. It's a very obvious target for the pullback. Additionally, the green support resistance line is right around there, and normally the pullback unfolds towards at least some support level, and so this would be a very good support level to watch, around 6,000, 46, 6,000 or so. So that gap will eventually get filled, we just don't know when. Further down, we have multiple more gaps, one minor gap between 23rd and 27th of May, and a major, really gigantic unfilled gap between 9th and 12th of May. And yet, even further down, we have an April 22nd to 23rd gap that is still unfilled. So we have quite a bit of targets that are available for bears, but they don't seem to be able to take advantage of it just yet. And the bulls predominate, and we're just seeing new highs, new highs, new highs. Will we finally see a pullback? Well, this is a good question. So the high yield bonds are potentially there to show us that we may be already seeing this divergence, and bond traders are generally speaking a little bit smarter than the stock traders, and so perhaps they're seeing something that we don't yet see. So let's see what happens in the near term. Let's switch gears. We're currently looking at ticker symbol IEF, which is also known as 7 to 10 year Treasury Bond Fund. So this fund holds bonds. In fact, only Treasury bonds of this particular duration. So currently, it is still in an uptrend. Bonds are in an uptrend. In fact, the last opportunity to buy, I think, was back on the 17th of June. I sent an alert out. We had a nice run. Target was reached, but then we were seeing this pullback. Ideally, we should have seen a breakout towards new highs, but we didn't. And this is reflected in the Treasury note yields. So here it is. This is 10-year Treasury note yield. Current yield on a 10-year Treasury note is 4.42%. Okay. Now on this chart you can see this blue support resistance line, which is at 4.36% currently. And notice that if we were somehow magically trading this security, this particular ticker symbol TNX, you can't really trade it in the United States at least. You have to buy bonds or you have to sell bonds short to play interest rates. But let's just pretend that we're actually trading this and we're able to trade it. So this is showing me that interest rate yields are actually in an uptrend here. And I would be thinking about buying interest rates. In other words, the interest rates could be headed higher, the way this chart is telling me to play it. Now, I've been hearing quite a bit of talk, especially from President Trump, about how he wants Jerome Powell, the Federal Reserve Chairman, to lower the interest rates. However, Jerome Powell is having none of that, and he's saying that we're going to be paying attention to the economy, we're going to be paying attention to the inflation, employment, and other indicators that they follow. So right now, if you read the news, even the Federal Reserve Commission, Commission, they are sort of split, which way they want to go. Some saying that they want to raise the interest rates, some saying that they want to keep the interest rates flat as is, and some are saying that they want to lower the interest rates. So President Trump clearly wants the interest rates to go down. And for that, the Federal Reserve needs to lower the interest rates. And just the other day, I'm already seeing more stuff about Federal Reserve Jerome Powell, how he, quote-unquote, potentially misappropriated $1 billion or so in the remodeling of the building of Federal Reserve itself. So it looks like there's a big push from the current administration to oust Federal Reserve Chairman Jerome Powell because of this chart, I think. This is showing that Treasury note yields are in an uptrend, and President Trump wants the opposite. He wants the Treasury note yield to be in a downtrend. Okay, so we're going to see what happens, but I think the resolution is very clear. I think sometime in the next few weeks to few months, there will be a resolution. Either the Federal Reserve will lower interest rates, or they will find a way to, get rid of Federal Reserve Chairman Jerome Powell. So we'll see where this goes, but it's just something to keep in mind, something of interest. Let me know what you think. Leave a comment in the notes. Let's switch gears again. We're currently looking at the DXY, dollar currency index. So dollar currency index is clearly in a downtrend. However, a few days ago, I wrote here rebound very likely, and lo and behold, we're actually having a rebound. So I don't know if the rebound is actually done. We're very oversold still. Ideally, or rather quite often, the rebound will take us to the yellow line, but most likely it actually will continue even higher. So I think the red line is even a better target for the rebound. So we're about 3 to 4% away from where I think the rebound will end. Why do I care about the dollar? Because we do trade gold, so XAU divided by USD. The bottom part of this equation is suddenly getting bigger. Gold is sort of indecisive. I mentioned last week that gold has landed on first support around the green line, and even it pierced it a couple of times here on the 27th of June and yet again on the 8th of July. But so far, there was really no follow-through to the downside. In fact, the other precious metal, XAG-USD, the silver, actually made a fresh multi-year high. So, go figure. I mean, this most likely has to do with the more of an industrial nature of the silver, but still. So right now, we're looking at this chart for gold divided by US dollar, and I'm still not really 100%. I mean, it does look more promising than last week, and it's very possible that we'll make new all-time highs. But should the dollar strengthen even a little bit, and should it continue where I said it will continue, to like the yellow line, or maybe even the red line, which is about 4% higher, I think gold will come under pressure. And we may see a pullback towards this blue support resistance line around 3,000, which will translate to around about 8% drop for gold or so. Gold miners, I also thought that we're going to collapse or at least move lower there on the 8th of July. Big red candlestick was a close below the green line, but really no follow through, and now we see a bounce towards the 24-year high. So again, all eyes are on the dollar. Should dollar continue to rebound, and it's quite likely it will continue to rebound. I just not sure. I mean, look at this move from the April, or rather from February into July. It's just non-stop drop. So I think the rebound is quite likely, and we'll see a rebound for dollar and potential move higher for gold, move lower for gold, I'm sorry. And finally, I want to touch upon Bitcoin. So this is Bitcoin on daily time frame, as I before said. How do we trade Bitcoin? We trade Bitcoin like any other currency pair. We trade it between the blue and the red lines. So usually the stocks, I use the yellow line for stop, but for the cryptocurrencies and for the various forex and commodities, we use the blue and the red line. So if if the stock is above the blue line, as in, for example, notice this Bitcoin just continues higher. So initial breakout was back in 2023 in February, and it was about 23,000. Notice this moves higher, and basically we're buying every time we close above the blue line. We just keep buying. The latest opportunity I actually bought myself. So I opened the Bitcoin position at 90,000 or so on 22nd of April. A few days later, my target was met, and I moved my stop to entry. Then we saw a new move towards fresh highs with a pullback towards the green line, and this is where I usually take profits, and I did go ahead and sell about half my position, and I was sitting in the position for the rest of it. My stop was at the blue support resistance line, and I continued to trail it higher. And then a few days, actually 2 days ago, we see a new all-time highs on the 10th of July 2025. New record was set, and today we had yet another new record. We're at around 118, almost 119,000. So where is this going? So I wanted to show you how to quickly estimate where the move will take us. And this chart is pretty obvious, because you can see I just drew in a line between the previous peak, previous high, and the recent breakout. And this pattern, kind of like a W-shaped pattern, we can see how deep it is. So we can measure from the lowest point of this pattern until the breakout occurred. So that's about $12,000 for the breakout. So we can duplicate this on the upside, and usually that's how it plays out. So this type of pattern plays out with a duplication of the previous depth of pattern to the upside. So we're looking at around a 12% move from when we broke out, and from today's price levels, we're looking for an additional potential $7,000, or about 6% move to the upside. So for now, I'm still holding my position. I want to continue holding it until we see some sort of a major pullback, but I don't see it yet, and my stop is still at the blue support resistance line, so pretty far away from the price action. And of course, you can find out more about these indicators by going to masterchartstrading.com. Click on sign up there, sign up for one of my products. So again, the indicators are available for tradingview.com, this interface. This tradingview.com interface is free. You can sign up for tradingview.com, come back to my site, Master Charts Trading, and then sign up for the indicators. There's a 7-day free trial. I'll open the door for you. You will have the same indicators on your chart. Very easy, even though it sounds convoluted. If you have any questions, you can send me a message, contact right there, or you can also send me a message on the tradingview.com. There is where I'm hovering chats. You can send me a direct message. I'm at Master Charts. You can also sign up for the newsletter. So the newsletter, I send out daily alerts and weekly members only videos to the members only. For example, this week we'll be covering all of the securities, ETFs, large cap stocks, various speculative securities, and gold related. So that's daily alerts and weekly members only videos. Best deal is to get both indicators and newsletters for the year. So you get 17% off for 2 months free. Sign up at $49.95 per month yearly equivalent. You can also get a monthly subscription, but it is $10 more. And if you have any questions, don't forget to ask them below. Like, share, comment on this video. That's it for this week's recap. Thank you for watching. Have another great trading week. Bye-bye.